Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our commodities update, look at technical analysis. Basically, we had a massive sell-off in everything, and we'll step through it. I'll give you my financial opinion, and we'll dive right in. So here we go. So this is the DXY. The DXY continues to strengthen. It is on a tear to the upside. We've broken this long-term resistance line to the upside and finishing quite strong. The dollar is going vertical, Goose. It is heading higher. It is killing it. So we still see that strength in the dollar. We've got the nice, good buying pressure day, small selling pressure, and it's been nothing but reaching for the skies at this point. And that looks like it could continue. Looking at the 10-year yield, it was stronger this morning, and then it was basically went flat to slightly lower throughout the day. And the 10-year yield has been in this upward move throughout. This is looking at it from a weekly candlestick basis. It's been rolling higher, and we've been continuing higher, breaking out of this trend here. And it is looking good to continue higher. Stronger dollar, stronger 10-year yield, just overall in general. The stock markets do not like that at all. We are seeing a little bit of buying pressure in bonds today. It's not much. We're still way down there. The overall trend is definitely lower for bonds. And I know I see a lot of people, they're very scared in the markets. They're going to create narratives of why you shouldn't be long commodities and why you should be going back into bonds. What I am telling you, or what I'm seeing on these charts, is the trend still intact for lower bond prices until the trend changes. I don't see any trend changes in bond prices moving higher, at least not yet. I also don't see any instances or signs that we have peaked in the 10-year yields. Or I should say that, yeah, we have peaked in 10-year yields. And we also don't see any signs yet of a peaking in 30-year yields. If I start to see these things really start to break down, I will change my mind. Just at this time, I don't see any large rotation in these yields yet. They're breaking out, doing a major breakout of a long-term downtrend line to the upside. Higher yields are going to hurt stocks. We know this. I've gone over it many times. And when stocks sell off massively, we could get a panic. A panic is a sell everything type of event. I think we got a little bit of panic today in the stock market and all, basically everything. It's a sell everything event. TYX to TNX ratio, we were lower, but the momentum is coming up a little bit today. This is usually favorable for oil, but definitely not today with everything selling off. The CRB index did sell off. We are heading lower in the short term. We have not found a short term. Short term is this over here. We have not found a short-term bottom yet. We are still drifting lower. We are most likely, or could, I should say, we could break this upward steep trend line. And there is a possibility that we come back to the 220-ish area of this general vicinity, somewhere in there. That looks highly likely. What this would be is a lead-in pattern, a lead-in pattern for a much larger move. But we are going to have short-term pain before that happens. Now, technical analysis on the short term is the least reliable, in my opinion. I'm riding through it just like my original strategy. So that's what I'm doing. Why? Because you can't time the market in the short term very well. That's why. So here's gold. Gold also heading lower, definitely getting crushed today, but everything else did as well. And I have not seen the buyers step in. I'm still looking for further downside in gold until we see reversal candlesticks. And this is breaking below its support level. If you're a short-term trader, you should have already exited at this time. Silver also heading lower, but we still have good support underneath us at the $18.15 level, and we are still above that support. Platinum, yep, big down day today, but we are still above support levels, and we are still slightly above the cost curve of platinum. We are basically resting on the cost curve of platinum. XAU to gold ratio, we gapped lower in the morning, opened up right here, came back down, and then momentum came back up at the end of the day. Not a huge momentum move, but at least we're getting a little bit of a wick at the bottom and not finishing strong at the bottom of it. SILJ, the ETF, we are basically breaking down below its support level. What I want to see is what happens Monday of next week. We do have support underneath us all through these areas in here. But we want to see what happens because this could be a false breakout where we launch from. I don't know if that's going to be the case. We have to find out and see what happens Monday. GDX also going lower. We've got another good support line underneath us. We've got support all where that price is right now. I'm expecting that we're going to get some support. We've been riding with some support already. We had a nice kind of jolt lower today. And that jolt lower is with the overall markets getting absolutely hammered everywhere. Scrolling down to crude oil got smoked, but I drew this in. It's a falling wedge pattern in crude oil. We are tightening up in this corner. And we did have a large down day today. There's a lot of fear in the market, lots of emotions. I can see it in some of the comments. And this could be a false breakdown where we head higher. Why do I keep thinking this? Why do I remain bullish on crude oil and a lot of these sectors? Well, we have an increasing interest rate environment. Inflation is out there, and I understand that things are slowing down. The question is, what is driving all of this? Our driver, in my opinion, is oil. And I understand that oil can go lower in the paper markets, but the physical markets, which is going to rule all, is still eating through inventories, and running deficits. This is global onshore oil inventories from 2017 to 2021. Orange line 2017. 2018 is this red line down here. 2019 is the green line. 2020 is the purple line that went way up, and our inventories from 2020 have been massively declining, and now we're at the lowest level of inventory that we have today. So we are eating through inventories. We do have a deficit, and we have a declining wedge with a sell-off day today. I don't know if I'm just crazy. Maybe I am. I kind of like the way this looks here. And I know everyone is so scared. But if we get some buying pressure Monday, I actually think it looks good. We do have long-term support at $75 underneath us, which is $4 below the price of where it's at today. That long-term support level is this guy going across right here in the middle there. So we do have the pattern where we kind of went sideways there. We pop up, we come back, and we're coming right down to that support level. The bottom of that support level is around $66 or so. So between 66 and 70 is where our strong support level is in oil. Natural gas, definitely getting sold off. I talked about this head and shoulders formation, the neckline, and then the break to the downside. I've been hoping for a move somewhere in this vicinity. Why do I say that? We are short natural gas in this world, guys. Germany is going to have a rough winter, and all the fundamentals are still in play. What we have are people panicking in the market. And when you panic, that's when you usually do stupid things that you regret. We could still pull back further into this region down here for natural gas this fall very soon. And I hope that happens because I'm looking to buy more in these companies. XOP, yeah, you know me, getting sold off, gapped lower. We have a little wick at the bottom. Not a huge one, but we're still above long-term trendline support of $106. So we could fall further down to a support level of about 105, 106, 107, somewhere in that range. And we're still looking pretty good, actually, even with this sell-off. And I know a lot of people, they want to decouple. They want to go opposite of the markets. And I've showed you guys how big some of these pullbacks can get. 50% declines are actually pretty normal. But when the declines happen, everyone gets so bearish. Guys, these are coming no matter what. This is part of the game. You have to learn the game and be part of the game in order to benefit here. Now, if I were to draw a line across here, this is on XOP. You draw a line across here, and what I am seeing, I'll put it on log to basically make this larger. Shoulder, head, and we're creating the other shoulder. This shoulder is being created, and we will break out of this thing and head higher. Short-term pain, short-term opportunity, inverted head and shoulders. Go, please look at the pattern up. But that's what I'm seeing in XOP. I've talked about this on our Platinum membership. If you guys need help navigating, finding-value.com, Platinum membership is the membership. I talk about this and I show you opportunities in these sectors and why I think that we were going to pull back this fall. Midweek update and all these, we're going to pull back, and we've been pulling back. OIH is also pulling back. The oil markets are coming back down lower. There's logarithmic. And we could move a little bit lower in the short term. But we are scribing out a little wick at the bottom, not a big one, nothing to get too fancied over, but I'm looking to see what we have for next week, what the trading action is on the beginning of next week. Looking at this is the uranium futures prices. We are still above the breakout line. We are still actually intact for the futures prices. We look at the Sprott Physical Uranium Trust. We have been selling off some, but we still don't look horrible. I know it feels horrible, but it doesn't look too bad from a charting perspective. We are still sitting above all of this support underneath us, all these trading transactions underneath us. And there is a possibility that this does head lower because of overall market fears. There is that possibility. There's nothing saying that we can't go lower in the short term. Looking at uranium, we are back at support level. We'll see if that support level holds Monday. A lot of the times what we see is we get a move off the base, and sometimes we do a double bottom. Is this a double bottom? I don't know. We'll have to find out Monday and see. Will this go higher or will this break and go lower? This is the kind of a bigger viewpoint of it. We're right back at support, and we'll have to see if that support holds. We'll have to see if it holds. Camco, CCJ, that is selling off. Again, we are in the pattern. We're not broken out to the downside or anything. We do have a bullish hammer candlestick where we were down today and down a lot, but at least we have momentum coming off the bottom. That's what that wick is showing us. Sometimes that can give us a little bit of a bounce and a bottoming type formation. We'll have to find out. And we usually find these wicks towards the bottom of moves, like ending moves. Is this the ending move? I'm not 100% sure. We're going to have to find out in the short term. Anything can move prices in the short term, guys. But this right here, we still have a nice solid lower support line that we have not broken. We're still inside this pattern. And I know people are getting antsy. They want this to break. But you know what? We don't control where these prices go in the short term. We don't control even in the long term. We invest because of the market imbalances and the structural deficits in the market. What happens is you eat through those we create a structural deficit. We eat through inventories. When inventories get to critical levels, that's when they go boom. I don't know if anyone knows the exact inventory levels of uranium. It's pretty highly guarded. And we can see it in oil that we're eating through our inventory. So I'm still a bull until inventories start to increase and break their downtrend deficits. TAN is also getting sold off, but again, we are still above its breakout line, support line. So we're still above support line. We look at it from a longer term perspective. We are doing that retest move back to support. Will the support line hold or will we break to the downside? That is what we're going to have to find out. But right now, I'm still going to remain bullish. COPX, we are breaking down a little bit here. We're right at support, and we're playing with the support line now. And that's where we have to see if we're going to hold or not. This could be a inverted flag pattern where we broke to the downside here. Drew that in the wrong location there. So we did break down, and we'll see if this is a bottom. We could be bottoming here, guys. And I know, or we could go lower. The possibility of going lower is very real as the overall markets still continue to sell off. So we'll have to watch it, and we'll see where we go. That's for COPX. The CRB to S&P 500, we've been breaking actually higher for commodities. It's still positive for commodities. Obviously, we had a down day. We could go down for a little bit, but it still looks really good. Looking at rare earth metals, we came back down to support. Again, we'll have to see if the support line holds. That's where we're at right now. There is the possibility that this will go lower because I do see some selling pressure in large down candlestick. We got another down candlestick. We have to see this turn before we have to see it turn. We have to see the buyer step in here and turn this. Lithium also selling down a little bit. We do have support in this general vicinity. That's kind of where it goes. We could base out a little bit before heading higher. Zooming in on it, we do have a down candlestick. We have a little bit of buying pressure at the end of the day. That's why there's a wick at the bottom. And we'll see if we can get, so we have support underneath us at $64 or so. So we have to see what happens. The S&P 500 is looking pretty bad, but there's some positives here. We got a nice little hammer candlestick. Could we get a bounce here? Again, we'll have to find out Monday if we get that bounce and if that end of trend is done. Usually when you get to these bottoms, you start seeing wicks at the bottom for buying pressure. We got a wick at the bottom. Will this reverse up? You know, we'll have to find out next week. We also have a wick on the bottom for the U.S. Composite Index. Is this a double bottom? We'll have to find out. If we break lower, we could see a waterfall decline. If we bounce here, we could see a short-term bottom. A lot of it depends on what interest rates do. We are in an uptrend for interest rates, and we very well could break down. If we break down and we see large selling pressure, it could sell off and turn into a sell everything type of event like we saw today for a little while. EEM also still selling off with the stronger US dollar. As the dollar increases, EEM will continue to fall. XHB, that's the Homebuilders Index, actually looks pretty strong. Probably the strongest sector today in the sell everything type event. It was slightly lower, but the momentum's up and it's trying to find, I think, a bottom here. Again, it's not verified. We just need to see what happens here. Lumber, it is heading lower for lumber. We're right at that bottom support level. We've got cocoa futures down 3.19%. We're coming to a support level right underneath it. We've got wheat. Wheat was selling off today. We could head a little bit lower in the short term if the overall markets continue to see selling pressure. This is momentum higher, though. The momentum's coming on up. It doesn't look horrible to me. We got selling pressure in soybeans. Selling pressure was across the board. We're right at support level. We've got corn selling off a little bit today. Doesn't look too bad. I still think this looks okay. No reversal candlestick. We've got copper here. Now, this is one we need to watch. Copper, Dr. Copper. If we see this thing blow below the lows of $3.20, I would start to worry. We did have strong selling pressure today. We could very well fall a little bit lower in the short term, but we want to hold $3.20. We want to break $3.75 and close above that. So those are our two areas, 375 to break roughly and 320 to hold. Moo, we're getting a little bit of a hammer candlestick, a little wick at the bottom. Again, sometimes what you see is kind of these double bottoming patterns, and then they bottom. But I'm not calling for that. We have to see the buyers step in here next week and show us that they are here. If the overall markets continue to sell off, we could see further selling pressure. Looking at aluminum, aluminum was actually looking better today. It's right at support. We've got that nice little wick at the bottom candlestick. We'll see if this support holds and if aluminum heads on higher. We've got Baltic Dry Index right underneath its long-term support level. We're right underneath it. We got to break back above it and get moving. So again, that's what I see in the markets. Inventories are still drawing down in oil in terms of physical inventories. We're seeing paper selling all over the place. Sell everything type of event, and everyone is panicking. And you know what I'm doing? I'm not doing much of anything. I am getting a little bit of an itch to buy. As people get more afraid and as people worry about things, because remember, the price is driving their emotions. Their emotions are then driving a narrative, and that narrative of them being scared is basically giving them reason why they either buy something or didn't buy something. What we need to do is remain objective. Look at the charts, look at the support levels. Are we breaking things to the downside? Now, we very well could break things to the downside. Things are looking weaker across the board. The overall stock market looks like crap. It is heading lower, and we do have a little bit of wick at the bottom, and we need to hold the level where it's at. If we fall and break to the downside, things could get pretty ugly. I agree with that. That's where people start panicking more. Panic is emotional. And when people, basically react or act on emotions, we could see a selling pressure event, which will sell everything off, which we saw today. So we'll have to see what Monday brings us. Hopefully it's not like a Black Monday or something like that. But as of right now, I'm not doing anything, guys. I'm just holding on. I'm holding on. We've got the long-term trend is in our favor for yields. The long-term trend is in our favor for commodities. And we could see further downside in the short term. I don't think any of these problems are resolved with an energy crisis. I don't think raising the federal funds rate is going to solve an energy crisis problem. That's what I think. So I think the root of the problem is in energy. I think it could very well destroy currencies. And right now, we're going to see some funky stuff with interest rates and probably currencies starting to have problems. And that's as expected as we have probably the largest global energy crisis that we've seen. And these currencies can't handle this type of these types of problems. That's my take on it. So we are seeing a sell everything event. People are scared. We're seeing the VIX spike up a little bit too. And what I'm doing is riding through it. I wouldn't change really anything. And I know people are going to try to time this market. Good luck to them. I already have my strategy in place. And we could reverse here very quick. So we'll see what happens. We'll see what happens next week. We need more data. And we need to hold some of the levels that we're at. If we blow down to the downside, it's going to get a lot uglier. I agree. So that's what I've got for today. Give me a thumbs up if you guys like the content. Subscribe to the channel. And we'll catch you next time. This is Finding Value.